If you are trying to secure a mortgage for a new home or trying to remortgage, then it has just become a little harder to secure a good deal. Hundreds of loans have been taken off the market by lenders because of concerns interest rates may go even higher to try to bring down inflation. Nearly 10% of mortgage deals, around 800, have been withdrawn. Those still on offer are costing more. Since the start of May, the rates on an average 2-year fixed-rate mortgage has risen to 5.38%, and the average 5-year fixed-rate mortgage is just over 5%. I'm joined now by Sally Mitchell from The Mortgage Mum, which is a mortgage broker. Welcome. Look, we're approaching percentages that some, especially younger homeowners, will have never come across before. What are you telling people? What are people telling you, about the impact that it's having on their monthly outgoings?
Oh, they're really very worried. This comes on top of a cost of living crisis. We've had the energy issue. Inflation is not going down as quickly as they hoped it would. And of course, although inflation has dropped, the sticky points of things like food are just going up again. So it's really difficult. It's just another burden for the average person to have to bear, unfortunately.
And Sally, in the last couple of days, these 800 deals disappearing off the market. If you are in the process of trying to buy a house or a flat, what should you do right now? Pause or press ahead with one of the deals that are on offer?
Oh, it's so stressful for people. These things come out, it seems, out of the blue. And of course, if you're in the middle of your purchase, but you haven't actually got your mortgage offer and that product is withdrawn, then you're looking at having to pay a lot more. And in fact, for some people, the affordability just won't work out. So they might actually stand to lose the property that they're trying to purchase. If they're remortgaging, then they're looking at certainly paying, a lot more per month than they were 3 days ago.
We are expecting interest rates to rise again. Are we likely, therefore, to see more deals withdrawn? And if so, what advice have you got for people out there?
It's so difficult. I mean, one of the main reasons that the fixed rate mortgage products have increased, being withdrawn and then coming back on the market at an increased rate, is because the swap rates have actually increased. So although we are affected very much so by the Bank of England base rate, we did see, even though that was increasing, fixed rate mortgages going down a little bit in the last few months. But now swap rates have increased, so therefore fixed rate mortgages have gone up. And, it's really difficult. You have to get all your ducks in a row. You have to get organised ahead of time, make sure all your paperwork is in so that if something like this happens and there's a 2 or 4 hour window to get that application in and to secure your product before things change, then you're ready to do so. I know brokers are working round the clock over the weekends, over the bank holidays, to try and get these applications in and secure those rates.
So many variables. Sally, very briefly, are you starting to see it have an impact on house sales, on the housing market itself?
It's really strange. To start with this year, we did see a slowdown in purchase. Most of the clients that we were dealing with were remortgages or product transfers. But in the last couple of months, people seem to have regained a little bit of confidence and maybe a feeling of, how much worse can it get? And then, of course, the last few days shows that things can change quite quickly. The market is fundamentally really resilient. It's a good, solid market. I think personally a lot of people are saying, I'm not going anywhere until we know what's going on, especially with interest rates, the Bank of England rate looking like it's going to go 5.25, 5.5 by the end of the year.
Yeah, we'll have to wait and see. Sally Mitchell, thank you very much for all that sage advice. Thank you.